All right, let's get right into it. The crypto market right now, it's on a total knife's edge. You've got the bulls on one side, the bears on the other, and a whole lot of uncertainty in the middle. Today, we're going to cut through that noise by following the money. And I mean a lot of money. We're talking $11 billion. So here's the big question, the one that's probably on your mind too. Bitcoin took a pretty big hit, and now it's just stuck. It's not going up, it's not going down. So what gives? Is this the quiet before the storm, the next big leg up? Or is this a huge red flag that we're headed for a much deeper drop? Well, the answer, it's a little more complicated than you might think.
So here's how we're going to break it all down. First, we'll set the scene, the market at a crossroads. Then, we'll look at this whole thing through two different lenses, what the chart watchers are seeing and what the on-chain data is telling us. That's going to lead us to a huge whale rotation. And finally, we'll see how all of this is causing a ripple effect across the altcoin market.
Okay, so first up, the market at a crossroads. And man, is it ever. Bitcoin took that sharp dive, and now it's just hovering. It's stuck in this really tight range, right around that critical $65,000 mark. And let me tell you, this isn't just some random number on a chart. It's a full-on battleground.
And everybody is watching this exact spot. I mean, analysts who usually disagree on everything, they're all saying the same thing. What happens right here, right now, could decide where the market goes for the next month, especially with all this big economic news coming out. The stakes are super high.
Okay, so how do we even start to make sense of this? Let's begin with lens number one. What are the chartists saying? These are the folks who live and breathe price action. And right now, well, the charts are telling two completely different stories.
And I mean, it is a huge divide. You've got analysts like TABTC looking at this and seeing a bottom forming. They're calling for a bounce, a pushback up towards 72,000. But then you've got analysts like Fengay who are looking at the exact same chart and seeing a classic topping pattern. They think we're heading down, maybe all the way to 58,000.
So there you have it, the two sides of the coin. The bulls are pounding the table, saying, look, the support at 65K is holding. The charts are showing hidden strength. Stay long. But the bears are firing right back, saying, no way. We got rejected hard at resistance. That's a double top. It's time to short this thing. So if we only look at the charts, we're at a complete standstill, a total stalemate.
All right, so if the charts are basically a tug of war with no winner, we obviously need a tiebreaker, right? So let's switch gears. Let's look through our second lens, the on-chain secrets. This is where things get really interesting, because now we stop looking at just the price and we start following the money, the actual coins moving on the blockchain. And to do that, you need to know about this one super powerful tool. It's called cost basis distribution. Now, don't let the name scare you. Just think of it like an X-ray for the market. It lets us see the price where everyone actually bought their coins, so we can see who's sitting on big profits, who's underwater, and most importantly, where the real battle lines of support and resistance are drawn. So we run that X-ray on Bitcoin, and what do we find? Something pretty wild, a massive chip exchange. What that means is the early birds, the folks who smartly bought in way down around $40,000, $45,000, well, they've been selling. They're taking their profits now that the price is up above $65,000. So what's the big deal about this changing of the guard? Well, it tells us that the selling pressure we're seeing on the charts, it's not random. It's the long-term OGs cashing out. But here's the crucial part. It creates a really fragile situation. Why? Because all these new buyers coming in at a high price, they have zero cushion. If the price even hiccups, they're the first ones to hit the panic button and sell. This whole chip exchange thing brings up a massive question, though. Where is all this sell pressure actually coming from? Because it's a lot. It's not just a bunch of small-time investors taking profits. Nope. The on-chain data points to one single, gigantic, and frankly, pretty shocking source. Get this, the answer is one single entity. An ancient whale who has been sitting on 100,000 Bitcoin without touching it for more than 7 years. A true diamond hands legend. And now, for the first time in almost a decade, this whale is waking up and making a massive market-moving play. And this, right here, is the key that unlocks this entire puzzle. This one whale is methodically selling off its Bitcoin and then instantly taking every single dollar from those sales and buying Ethereum.
They've already swapped almost $3 billion worth. Think about that. This one player is single-handedly causing the sell pressure and weakness in Bitcoin that the bears are seeing, while at the same time, they're the reason Ethereum is looking so surprisingly strong.
And what's crazy is, this isn't just one whale's quirky trade. It's actually mirroring a much bigger trend in the market. Just look at the institutional money, the ETF flows. In the same time frame, Bitcoin ETFs brought in a kind of meh 88 million. But Ethereum ETFs, they pulled in over 450 million. That's more than 5 times as much. The message is pretty clear. Right now, the big money is betting on Ethereum.
So when you have this kind of huge capital shift, money flowing out of the king, Bitcoin, and into the number 2, Ethereum, it's not going to happen in a bubble. It's sending shockwaves across the entire altcoin universe, and it's creating some really interesting and different situations for other major coins.
And you can really see that when you look under the hood. Take Cardano, for instance. The biggest of the big super whales are just gobbling up this dip, buying more ADA than ever before. Then you look at Dogecoin. The data shows that the people who bought in at 21 cents are like a fortress. They are not selling, creating this super solid price floor. And XRP? It's actually having a healthy version of that chip exchange we talked about, with new buyers coming in at higher prices, which is a good sign. The big takeaway here is that you can't just look at Bitcoin anymore. The market is not one single thing. There are a bunch of different stories playing out.
So when you put it all together, the main takeaway is pretty powerful. The charts, they showed us what was happening. Bitcoin was stalled out. But it was the on-chain data that gave us the why. One giant player was making a deliberate, massive move out of Bitcoin and into Ethereum. When you combine those two views, suddenly the whole confusing picture becomes crystal clear.
And that leaves us with one last really big question to chew on. This ancient whale, this entity that saw bull runs and bear markets come and go for 7 years without moving a muscle, why make an $11 billion move right now? Is this just some random trade? Or is this whale sending a signal? A signal that maybe, just maybe, the real leadership for this cycle isn't going to come from Bitcoin, but from somewhere else entirely. Definitely something to think about. Thanks so much for tuning in, and we'll catch you on the next one.